Alrighty, guys, so we have a lot to break down in this video like we do every single Sunday. We're going to go over 10 stocks that I'm looking at, all of which are reporting earnings, and we're going to break down some numbers regarding these companies that are reporting earnings, and we're going to go over the overall stock market as well, talk about the S&P, the NASDAQ, kind of where my head is at, what my thoughts are. So sit back, relax, hit that like button, make sure to subscribe, and I don't know if you guys noticed, but we changed the channel name from Stas Surfes to Stas Talks Money, or well, that's my second channel name. I'm mixing them up now, guys. Stas Talk Stocks. That's the new channel name for this channel right here, and I would love to know what you guys think about it. Do you guys like the name Stas Talk Stocks? Do you dislike it? And seriously, let me know your real, honest feedback in the comments down below. And I've had this name in my head for quite some time, honestly, a couple of months, but I didn't know what to do with it. I was thinking, should I start a podcast? Probably not. I don't know if I want to go that route. This kind of already is a podcast, right? Should I change the name to my YouTube channel? Should I make another channel called Stas Talk Stocks, right? Which now I made a second channel called Stas Talks Money. Then I figured, let me just name the main channel Stas Talk Stocks and kind of go with that branding heading into the new year. Stas Talk Stocks, Stas Talks Money. So what do you guys think? Honestly, let me know your thoughts in the comments. I would love to know your feedback. Honestly, it means a lot to me as you guys are the ones watching the videos. So what do you guys think about that? And with that being said, let's just dive into the video. We have a lot to break down. We're going to go over, again, a bunch of stocks, earnings coming up, the overall market. So let's just get into it. And what we're noticing, let's just dive right into it, starting off with SPY. What we're noticing heading into this week is the bulls are at a big resistance, which we've known this, right? We've talked about this on the channel, and you guys can see that same thing here with Triple Q. If I pull it up, you all can see, we're at a big resistance on this yearly chart. And, throughout the entire bear market here, we've seen what are called bear market rallies, a bunch of, big moves over the course of the past year, right? Where each time we've been met with, with a big resistance, and we've gotten hit, and we've hit lower lows, right? We can see that here on Triple Q and going back to SPY. So what worries me now heading into this week, guys, even though, like I said, we, in previous videos, we could see more upside, we might see a Santa Claus rally, the start of it. We've honestly been rallying. I mean, if you guys haven't noticed, SPY's up from 348 to now 409. It's up 16% in the past month and a half, almost 2 months. So this might continue a little bit into, December here. But at some point in the next month and a half, heading into the new year, that's where I feel like we might be met with another sell-off, right? Which could be anywhere from, 415, 420, 425, who knows? I mean, anywhere at this point, as we're still, again, in a downtrend on SPY. So until the bulls start getting out of, let's say, 435, 440, the bears are still going to be in charge on this ETF. And if Triple Q, same thing. If Triple Q, let's say, breaks out of maybe 315, 330, especially 330, okay, at that point, maybe the bulls start to get control, gain control. But until then, the bears are still dominating. And that, that's something that's in the back of my mind heading into this week and heading into the rest of this month of December until the bulls prove me otherwise, which they've done very well. But is the rally going to last, or is this going to be another bear market rally, which we've talked about, in plenty of videos on the channel, that during bear markets, we see many rallies where everybody's like, oh my God, this is it. This is the bottom. We're breaking out all-time highs again. And then all of a sudden, boom, the stock market, as I'm choking on my words here, guys, get smacked in the face, and then it's right back into, a downtrend, right? So that's in the back of my mind right now. I'm not going to lie. And it should be, honestly, in the back of your minds as well. So, yeah, let me know your thoughts in the comments about that, SPY, Triple Q, just those quick thoughts that I had or that I just mentioned. So with that being said, guys, let's talk about some stocks that I'm looking at now heading into this week, all of which are reporting earnings, and I want to break down specific numbers here. Well, I mean, these are estimates. They're not for sure going to report these numbers, but either way, we're going to break down a bunch of numbers, a bunch of estimates in this video. So if you all are finding value, hit that like button, make sure to subscribe, guys, and let's just get into it. So Costco is number one on the list. Costco this past week, I'm not sure if you guys caught it, but sold off a lot. This stock sold off a ton. It went from about $535 down to 500. Actually, no, it's under 500. It's at 494 as of close on Friday, meaning it is down about 8-9%. And at this point, this is going to be a big spot for the bulls, right? You can see here if I zoom in a little bit, if I pull up the circle tool, what are we looking at here? This could be a higher low for the bulls here on Costco, right? Well, it is a higher low. Now, the million-dollar question is, are buyers going to come in? We have earnings coming up here on, what day is this? Let me see if I can pull it up and see on the 8th of December, which is what? I think that's on Wednesday or Thursday. Either way, guys, I always mix up the calendar. Actually, I have a calendar right here. Let me pull it up on my laptop very quickly. Give me a second, guys. So December, where is it here? December 5th, 6th, or actually, no, that's January. December 8th is Thursday. Yeah, so Thursday they're reporting earnings, and they're looking to do EPS of $3.11 on revenue of $54.7 billion, which would be up, not a ton, but still 8.6% year over year, which is not too bad for Costco. So heading into this week, guys, the main thing I'm focusing on technically, like I just said, is this spot here on the 4-hour chart to see if bulls are going to come in. Are buyers going to respect this trend line? Are they going to come in at the 180 SMA on the 4-hour chart? If they do, guys, right around 500, 495, 505, and numbers are good. If buyers start coming in, we are going to get potentially a rip back towards that level from a couple trading days ago, more like about 2 weeks ago. And if that point were to break at 535, there could be even more upside towards from there, 550, 55, 560, which 560, guys, that was the high from the middle of August. So Costco, you got to watch it. And this is a company that I've talked about a lot on the channel. I've talked about it a lot over the years, that I've always wanted to own it, but it always trades at a premium. And, for me, when I'm looking at individual stocks, I want to buy them at reasonable levels. I'm not willing to just pay whatever price for the stock. I want to buy the stock at a reasonable point. And for Costco, for me, that's anywhere from 300 to 350, and the stock right now is at 494. So it does have to come down a decent amount more, and we'll see. Maybe it does over the course of the next, maybe not throughout the course of the rest of this year, but maybe at some point in 2023, it might come down to that point. And that's where patience is crucial, because you might think it might not. And, for all we know, it might happen in a couple of months. If I told you when Adobe was $700 a share, if I told you, wait, in a couple of months, in about a year, it's going to be a lot lower, you would have been like, oh, no, you're crazy, Stas. But look, Adobe right now, it's at what, $341 a share? It's been cut in half, and there's so many examples like that. And as you guys know, we could talk all day, list example after example after example of stocks that were very high, and these are great quality companies that you'd be like, oh, there's no way it's going to go to that point, and lo and behold, it goes to that point, right? So GameStop is also reporting this week. Let's pull this up. GameStop is on, let me see here. Let's see, the 7th, which is on Wednesday after the bell, right? That's on the 7th. It's on Wednesday. Yeah. Wednesday after the bell. So GameStop's looking to do negative 28 cents in earnings per share on revenue of $1.35 billion, which would be up about 4.5% year over year. And if you guys take a look here on the 4-hour time frame, if I zoom in a little bit, you're going to see GameStop's been trading in this range between pretty much $25, $24.75, 24 as support, and resistance at about $27.75, $28. And right now it's pretty much testing $28. If it's able to break that point and then break 30, which is where my second alert's at, well, it's my only alert. I should put one at 28 as well. If these points are able to break, we break $30, there could be another leg up, probably towards mid-30s initially. That's where this was back in the end of October. Then we'll see where it goes from there. As you guys know, GameStop could catch fire very quickly. We've seen it do it time and time again. So EPS for them, did I mention this? Negative 28 cents on revenue of $1.35 billion. That's up 4.5% potentially if they do that year over year. So Lululemon is also reporting, let me pull it up, ticker symbol LULU. They're looking to do EPS of $1.96 on revenue of $1.81 billion, which would be up 24.5% roughly year over year. And this stock has been just breaking out. Their earnings, let me see, what day are they? They're on the 8th on Thursday after the bell. This stock has just been breaking out. You can see here Lululemon took out 350, 355. This was a couple weeks, or not even, about 10 days ago, 2 weeks ago. We took that point out, which 355, that was the high from the middle of September. So we broke out of there, and now we're well above it. And we actually just recently took the highs out from the middle of November, which were 365. So now this is at 385. Looks like we're filling the entire gap. We're well on our way to filling the gap to 410, 415, where this was in April of 2020, right? This looks really good. And one worry I have is with stocks that are running up heavily into earnings, if the earnings aren't that good, the stock might be setting up for a drop, which is very possible. But if these earnings are strong, for all we know, this could be going to 400, 415 in no time, which, is kind of what I'm looking at here on Lululemon. And we also have Broadcom this week, guys, ticker symbol AVGO. Let's pull that up. Broadcom's looking to do EPS of $10.28 on revenue of $8.9 billion, which would be up potentially, or rather roughly, 20.2%. And Broadcom's one that's been reversing slowly. It's above the moving averages. We have a golden cross. We do have an inverse head and shoulders that pretty much has fully played out. You guys see that here on the 4-hour chart. Now my alert is set at $562 a share, which happens to be right at the highs from August, late July, early September roughly, right? So I want to see this get out of 550, 560, and at that point, we might start getting momentum towards that 590, 600 level. So Broadcom, watch out for it, guys. This is one that, you could argue is a little overbought. But if earnings come strong, on the 8th of December, which is on Thursday after the bell, we could break through that 560 mark for all we know. So AVGO, watch out for it. DocuSign is another one, which is one of the pandemic favorites, right? Which is still not breaking out of the downtrend. I mean, this thing has been completely and utterly destroyed. I mean, look at the chart, guys. Awful, from $3.15 to now $40 a share. It is down 85%. So DocuSign is reporting this week. Let me see here. On the what day? On the 8th, which is on Thursday after the bell. And they're looking to do 42 cents in earnings per share on revenue of $626 million, which would be up about 14.9, 15% year over year. So for me, guys, to be honest, I'm not going to sugarcoat it. I'm not going to be like, oh, DocuSign's great. I love the company. I'm going to buy it. I'm not going to touch it, to be honest, as a long-term investment. There's no way. As a trade, maybe if they surprise on earnings, I have no idea. I'm not really banking on that. I'm not, buying anything beforehand to try and, bet on that. But if they do report earnings on the 8th, maybe they do well, the stock starts reversing, maybe I'd consider it as a trade. But as a long-term, guys, there's no way, even as a trade, there's no way until the trend starts to reverse, which right now, I'm not seeing any signs of that. And I'm sure you guys aren't seeing any signs of that either. So DocuSign, watch out for it. Chewy is another one that I want to talk to you guys about. Chewy is reporting on, let me see here. Let's see, what day is that? Where is this thing? On the 8th. So it seems like every company's on the 8th after the bell. Chewy's looking to do negative 9 cents, so they're going to lose 9 cents on the quarter for earnings per share on revenue of $2.46 billion, which would be up about 11% year over year. And the thing I like about Chewy's stock price, or the chart here, guys, is the fact that we're well above the moving averages. We've broken out of this wedge that we were in for a good couple of weeks. And now with Friday's move of 1.3% in the midst of a red day, mind you, we're testing the highs from the middle of November, right around $46, which if these highs are able to break, we also break 47, this could be off to the races. 50, 51, 52. That is where Chewy could be going. So watch out for it. 11% revenue growth. I mean, it's not that great. It's not horrible. Well, I guess for a growth company like Chewy, from where it was, comparing it from where it was to 11%, all right, maybe that's bad. But it's going through a period right now of slower growth. That's just the reality of the matter. And we'll see how they get out of it. In the next couple of years, I'm sure the growth will pick up again. But right now, it's slowing down a little bit. And the stock, I mean, it looks like it doesn't care, right? The stock, like I said, the chart looks pretty decent. So Chewy, watch out for it. And the next stock is Dave & Buster's, ticker symbol PLAY. And actually, wait a second. Before we dive into Dave & Buster's, you guys have to get your 15 stocks from Moomoo and your 12 stocks from Webull. Of course, if you haven't done so already, all you have to do is use that link down below, that Moomoo link, deposit at least $100, and you could get up to 15 stocks, each up to $2,000. And with Webull, deposit any amount of money, and you get 12 stocks. And it also, of course, helps out the channel. I appreciate you guys as always. And now let's dive into Dave & Buster's, which clearly at this point we have an inverse head and shoulders. It's above the moving averages slightly, and you could argue even we have an ascending triangle forming right here, which you guys can see. It's pretty clear as day. So for this week, Dave & Buster's, guys, we have to see a break over 40, $41, $42. At that point, maybe this ascending triangle starts breaking out. Maybe with earnings coming up on these earnings on the 6th, which is on, I believe, on Tuesday. So they're looking to do 4 cents in earnings per share on revenue of $473 million, which would be up 48%, almost 50%, which is pretty impressive. So set your alerts. Mine's at $40, and we'll see what it does from that point. We also have Smith & Wesson, ticker symbol SWBI, which their revenue growth, guys, or shall I say, their revenue decline is looking awful. They're looking to do about $145 million in revenue, which would be down 37% year over year. That's awful on EPS of 40 cents. And this stock has been reversing, but I mean, overall in the past couple of months, in the past really year, it's been more like a year and a half, it's been downtrending. I mean, and it doesn't look like at all it wants to reverse. So Smith & Wesson, earnings coming up on the 6th after the bell. Are these earnings going to turn the stock around, or is it going to just set up for another dump after these earnings? So watch out for Smith & Wesson. Toll Brothers is another one that I want to talk about very quickly, guys, which also you could argue there's an inverse head and shoulders, and it's playing out to a T right now, which it is. You guys see that, right? Left shoulder head. We got the right shoulder right there. So earnings are coming up for Toll Brothers on, what day are they on? Let me see here, on the 7th, which is on Wednesday. So they're looking to do $3.95 in earnings per share on revenue of $3.17 billion, which would be up 7.3% year over year. So there's no doubt about it. Even though the inverse head and shoulders is playing out, we have a lot of resistance coming up on Toll Brothers between 48, 49, $50. It's going to be tough to get out of there, in my opinion. We have to get some really strong numbers, really strong guidance to see that stock break through that threshold. So $50 is where I just put my alert on Toll Brothers. And the last stock for the video, guys, is none other than Campbell Soup, which is one of those stocks that is in a stealth bull market. You guys can see it here on the 4-hour chart, on the yearly chart, on the 3-year chart. You're going to see we're pretty much near all-time highs. And let me actually double check. Where are all the all-time highs for Campbell Soup? Maybe 50 or 60. Yeah, 68. So we're not too close. I mean, we're close, but we still need another 20% rally to get there. But still, if we look at the 4-hour chart, it's still in a bear market. Bull market in the midst of a bear market, right? You can see we're pretty much at a high. We are at a high here on the 4-hour chart. So Campbell Soup is looking to do 88 cents in earnings per share on revenue of $2.45 billion, which would be up 9.7% roughly year over year. And those earnings are expected to be coming on the 7th before the market, which is on Wednesday before the bell. So yeah, I mean, this stock has really been crushing it, and there's a lot of companies, a lot of stocks that are near all-time highs or at all-time highs in the midst of this bear market, which, in every bear market, there's a bull market. You got to remember that. So with that being said, guys, if you enjoyed the video, hit that like button, subscribe. Don't forget to get your 15 stocks from Moomoo and your 12 stocks from Webull. All those are linked down below. And you could also join my Patreon if you guys want to check it out. You know, you get all my call outs throughout the day, morning update videos, exclusive content, more access to me as well throughout the day. That's on Patreon, link down below. And with that being said, I'll catch you in the next video. Peace out.